Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So we're not just looking at, say, support or resistance levels. We're also looking at the pace or momentum heading into support or resistance levels, and where is the price action going into these levels in a larger trend. Now, the first building block are these support or resistance levels. And support and resistance levels are price zones in the market where a security is liable to react in some manner that affects the trend that's in play as the support or resistance levels hit. So basically, we're looking at price points in a security or in one of these options where we're going to see, say, let's just say we're in an uptrend where a security is moving higher and it's coming into a resistance level. Now, a resistance level is most likely to stall or reverse that uptrend move. Now, when I'm referring to a correction, it doesn't necessarily mean that there's going to be a strong reversal. If you have an uptrend, a security that's moving higher, and it comes into a resistance level and favors a correction, that correction can occur through time or it can occur through price. So we can get a pullback, or we can get a trading range, or we can get a little bit of a combination of both. And which one we get is actually going to depend upon our next building block, which I'll get to in a minute, and that will be the pace or the momentum. Now, the key word in this definition here is the one right here. Let me highlight it. Zones. So when we are looking at support and resistance levels, these are price zones, not exact specific price levels. A lot of people will think, well, there's a Fibonacci resistance level at, let's say, 1.0780 on the USD CHF pair. Well, that might be an exact price point that is serving as resistance, but that is actually going to be a zone. And how quickly or gradually that zone hits is often going to determine how well it holds. So a major flaw that a lot of traders will run into is that when they're placing their entries or stops or taking their targets, they will look at these exact price levels and they won't give them enough leeway on either side of that exact price to still be able to have some sort of reaction to that price zone. And they'll assume that, let's say, if something breaks by a couple of pips or a couple of cents, that if it's trading on the other side of that support or resistance level, then it's actually broken that support or resistance level, when that might not, in fact, be the case, and in many cases it isn't. So let's look at some examples here of types of support and resistance zones. Now, some of these are really basic ones. You have whole number support or resistance levels. This would be something like 103 on the CDD, which is basically our US dollar, Canadian dollar. And this is a price level where we saw that hitting this morning, coming into it as upper level or lower level support zone rather, and we had 103.5 as upper level resistance. Now, some securities, they will treat half numbers comparable to how they will treat a whole number. So you might have something, for instance, that moves in 50-cent increments, whereas another security might move in $1 increments, where it's serving as a support or resistance zone at these 50-cent levels in addition to the whole number levels. And this is pretty common in the CDD, for example. You often see it stall at levels like, 106.5 was support a couple of days ago, broke that level of support, falling down into 106. So you're going to see this type of action over and over again. Now, other types of support and resistance are previous highs and lows. So if something pivoted at, say, in this example, we had 106.75-ish was a recent high on the CDD. And this will serve as a resistance zone if it manages to bounce back up to that level. Now, another type of support or resistance zone is a previous congestion zone, and a lot of people don't really take this into account. But if you have something that has been trading in a trading range, like CDD was in a trading range from 104 to 104.5 for about a week, about 2 weeks ago, a week and a half ago, and this zone is actually going to serve as a resistance level now that is trading under that level. So this is another level to look at, and often it's right in the middle of a trading zone that will serve as the strongest support or resistance. The lows and highs of that trading zone will serve as some support or resistance, but when you're looking at strong swings back and forth in a security, usually it's the middle of that congestion zone that's going to serve as the best support or resistance level. Another type is going to be the gap levels. A gap is basically when a security closes at one price and opens at another. That's the most common type of gap when you're looking at the options. And when you're looking at these, the closure of these gap levels is going to serve as a support or resistance zone. Another type of support or resistance zone is one that I call an equal or measured move. And I'll show you some examples of this here in a little bit, because this is one of the best types of support and resistance to use for timing targets on a position. Of course, also indicator support and resistance levels, things such as moving averages or Fibonacci retracement or extension levels, are also going to serve as support or resistance zones. Now, these seem really clear-cut, and I'm sure I didn't lose any of you during this process of going through these, but when it's really important to kind of get a handle on what these actually look like on the charts and keep them in mind when we go through the additional building blocks, because we're not just looking at one building block in and of itself. When you're looking at market timing and how to actually position yourself in a security, you're looking at how these building blocks interact with each other. Now, here's some examples here. This upper chart, what we're looking at is the EUI, which is the US dollar euro. And you can see that, here, let me change this, a little bit better highlighter. Over here, it had popped higher into that 73.50 level. Here's a good example of how price resistance can hit at a half number. And it traded in a range there for about a day or so, just over a day, and it broke higher out of it. When it came back, that zone, again, served as a support level, even though it had been a resistance originally. It bounces up, comes into nearly just over the 74 zone, pulls back down, momentum shifts here at the support zone, which we'll be looking at here again in a minute, and it bounces back up into this previous high, which serves as a resistance. What you can see as you look through each of these, though, is that the highs are not exactly the same one to another. When you have momentum shifting into a resistance zone, it might not hit it as strongly as you have a sharp upside move into that resistance zone. So think of these levels of support and resistance like you would a trampoline. It's going to have kind of a bounce effect to it, and the harder or faster you hit these support or resistance levels, the more give they can have to them. So even though this is a support zone here, it fell really sharply into that level, so it had a little bit of give or leeway on the downside, and vice versa when it comes back up.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.